Well, after months of waiting, silver finally broke out today. You don't trade physical gold and silver. The transaction costs are too high. What you do with physical gold and silver is you buy it and you keep it. We have a real currency crisis. We have hyperinflation, which is a distinct possibility. How are you going to buy stuff? But the good news is it's still early. It's not too late.
Welcome back to the latest video. Today we have some exciting insights from renowned economist Peter Schiff. He's got some bold predictions about the future of gold and silver, especially in Asia. Are we missing the big picture on inflation and precious metals? Let's dive in and find out now and stay connected till the end of this video.
Well, after months of waiting, silver finally broke out today, ahead of the breakout, because it appeared to me that a breakout was imminent. Well, now that breakout is history. But the good news is it's still early. It's not too late to buy silver. Sure, it would have been better to buy it before it broke out, but buying it right after the breakout is almost as good. It's a lot better than waiting. Silver closed today not only above $30 an ounce, but above $31 an ounce. It finished the week at around $31.50, although I still see it trading. That's up better than 6.5% on the day. Silver is now up more than 30% so far in 2024. Today's close is the highest price and the highest close for silver since February of 2013. And if you look at a chart, it looks like the price is going to accelerate rapidly from here. That's why I am recording this video. But silver isn't the strongest metal year to date. That honor goes to copper, and it's not even precious. Copper was up about 4% today, not quite as much as silver, but it was up 33% so far in 2024. I looked at the 1970s, the inflationary decade of the 1970s, and if you look at what happened at copper prices from 1970 through 1980, copper didn't even move that much. It only moved up about 90% during the course of that 10 years. Now, that's still a pretty big increase, 9% a year, right? That's a lot of inflation that drove up the price of copper. But so far this decade, since 2020, before COVID, it actually got even cheaper if you measure it from the COVID lows, but I'm ignoring that. If you just look at what's happened from 2020 to May 2024, we're already up 80%. This decade isn't even half over. A lot of people say this isn't the 1970s. They're right. It's not. It's much worse than the 1970s. That's what copper is telling you. In fact, if I look at a chart of copper, I think an explosive move is coming. We may even get to $10 a pound. It closed over $5 today. At $10 would represent a double from where it is right now. But looking at the chart, I think that kind of move can happen. It may even happen as soon as next year. But even if it takes another 2 or 3 years for the price of copper to double, that is a huge move. And believe me, if copper goes to $10 a pound, silver's going to $100 an ounce, probably higher. And that means $31.50 is still cheap. If you don't buy the breakout above $30, you may end up buying the breakout above $50. That could happen soon. A lot of our customers have been waiting for a pullback. Now, if you've been listening to my podcast, I've been advising people not to do that. It's not worth it. Any pullbacks are going to be short and shallow. It's not meaningful if you are a long-term buyer. Like if you want to trade silver or gold, day trader, oh, sure. Yeah, you got to be more strategic, look for pullbacks. But if you're day trading or even short-term trading, you shouldn't be buying any physical silver or gold. Open up a commodities account, trade futures, or buy an ETF at a discount broker. That's what they're for. They're for trading. You don't trade physical gold and silver. The transaction costs are too high. What you do with physical gold and silver is you buy it and you keep it. And you keep it until you need it, not until you sell it. A lot of people are going to need their precious metals, especially their silver. They're going to need it because it may be the only monetary instrument that other people may accept. in exchange for goods and services. We have a real currency crisis. We have hyperinflation, which is a distinct possibility. How are you going to buy stuff? If we end up with price controls, which I think may come, there's going to be shortages. There's going to be black markets. How are you going to buy stuff on the black market? It may be that silver is what you need. So you're not actually going to sell your silver. You're going to use it as money. And one of the best monetary silvers is junk silver. If you don't know what junk silver is, those are U.S. coins minted by the United States that circulated as legal tender. Up until 1964, all dimes, quarters, and half dollars were made of silver, 90% silver to be exact. In 1965, they took the silver out of the currency or the coins, and they replaced it with nickel and copper. But pre-1965, you get silver. And they sell junk silver in bags, and they call it junk because it's circulated. You know, you can buy uncirculated dimes or quarters or half dollars, and they cost more because they're more for collectors. If you just want the silver that's in the coins, then you buy the junk silver. And they sell it by the bag. A full bag is $1,000 face, not 1,000 ounces of silver, but $1,000 face. And in fact, looking at the premiums, historically, junk silver is cheap. It's cheaper over spot than it normally is. I expect that to change. I think the move up in silver is going to attract a lot of demand, and there's not a lot of supply of these bags. So while there is some, you should contact Schiff Gold. If you want to get $50, and they're nice looking coins. You get the Kennedy $50, the Ben Franklin $50. You can buy those, but they're actually 50 cents an ounce extra, more than a dime or a quarter. The dimes are a pretty good deal because if you want a really small quantity, they're perfect for barter, and they don't cost any more. The reason that the $50 are more expensive is they didn't mint as many. There's not as many $50 around as there are dimes and quarters, so it's all a supply and demand situation. Plus, people like the $50 just as a solid coin, and so you're going to pay more if you want to get them. But the key is to get them before the price and the premium go much higher. Every time we get one of these strong Fridays, I think maybe over the weekend we're going to get an explosive rally. Sunday night, come Monday morning, we're going to gap way up. We haven't had that happen yet, but it's going to happen. And I think when we get a real big move, because today's move was solid, but it wasn't, the type of move that I know is coming. That may happen Monday. It may not. It may happen on another Monday or any given day. But I think there's a good chance that when gold and silver really break out, it's going to be in Asia, because that's where all the buying is coming from. In fact, if you look at the prices that are being paid in China for gold and silver, especially silver, they're paying big premiums over what we're paying over here. So that's where the buying is taking place. In fact, if you look at investors, both in the U.S. and Europe, they've been net sellers. The ETFs, the gold ETFs, have had net outflows for the last 11 months. Now, I don't know so far for May. Maybe it'll change because this month isn't over and we don't have the data. But for the prior 11 months, investors that buy ETFs have been selling gold the entire time that it's relevant.
Peter Schiff's insights paint a compelling picture of the current and future state of the precious metals market. As Asia leads the buying frenzy, and with signs of inflation all around us, it might be time to reconsider your investment strategy. Don't forget to like, subscribe, and hit the notification bell for more expert analysis and economic insights. What are your thoughts on the future of gold and silver? Let us know in the comments below. Until next time, stay informed and stay invested.